Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for a pretty active trading day. It was pretty crazy. And it is Thursday, and we are at the 29th of May. Tomorrow's the last trading day, 2025, and we're getting on to 6:30 in the evening. All right. The stock market lower to start the evening out. Don't quite know where it's going to go one way or the other. We'll talk about that in a minute. Metal market's all a little bit lower. The dollar got crushed today. There's no other word but crushed. I tell you, if this market gets itself much under the 98 level, it's got the possibility of dropping another 8 to 10%. I'd be very cautious here. I've seen this event before. When we take a look at the energy markets, Yahoo for natural gas. I have traders that, if you remember, I did a special report on natural gas, and I've been waiting in the woods. Can I put out a sell recommendation? That was the idea here, to get the market to break. And every now and then a broken clock gets very right. And 2 days ago we did that, and today, bye-bye on the big break. And I'm the happiest camper. I can smile, all right? So I'm quite pleased with that. Notice that we've moved over to September bonds and notes. Bitcoin, you're now into the June contract, and soon we'll be looking to get rid of Junes on other things and Julys, even in the grains. Very shortly, I'll be moving to the other months. I got to decide, do I want to start looking more at the new crop, which we're just growing? So there'll be a point where that all comes in. Right now, these are what we call old crops at that point. In terms of news, you got the monthly personal income spending and the PCE index for April coming out tomorrow at 7:30. The traders will be looking at that PCE index because the Fed likes to see that number. We're going to get the May Chicago PMI. We're going to get University of Michigan final consumer sentiment numbers. They'll come out at 9 o'clock. They could be anywhere. We've seen these sentiment numbers now moving rather dramatically from the prelim to the final just recently. And that's because of all that's going on with the tariff talk. And Atlanta Fed President Bostic will speak at the Council of Economic Education at around 11:20. We'll see if he has anything to say. Now, I cover tonight in my written update something that I was reading in Bloomberg about Section 899 of the tax bill that was passed. I don't know if you realize it, but buried into the bill is something where the president can go after countries, individuals he calls discriminatory. And with that, he can take the taxes up on their investments in the U.S., let's talk bonds and notes, by 20% tax. Why would a foreign country want to invest with us if that's going to be in that? I have my doubts. I think he'd drive money away, not to us. So I know why he's doing it. He's doing it because he's very upset with the fact of the digital tax that some countries put on the U.S., and then we get to some countries have a minimum corporate tax that they charge for U.S. companies doing business there. Not based there, but doing business there. So this gives him a weapon. I think that it goes too far, but that's my own opinion from my early readings of it. But I certainly would be concerned, and I don't know that it benefits us. The reason is, well, it's great for him to negotiate with. That just hangs over that country's head. I think that there's other things to do. I don't think I'd like that. So as we were talking, we said that these markets are having a good time. So let's take a look at what a good time means. On a weekly chart, it doesn't look like it's been volatile at all. Do you disagree? Do you see volatility there? I don't. It's not the move you had to get up to the 18-day average, but if you're watching on a daily basis, it is volatile as can be. When we come over on a daily bar chart, since this April low, the market's gone up. And when we got up here, I said, it's time for consolidation. And that's what's been going on. This does not mean you can't take out these highs and move up to the all-time high. It's a possibility, all right? You can't rule it out. That number is 62.36. The trend is up. The market is staying above the 200, the 100, the 18-day average, and we just had a bullish event take place where the shorter-term average, I use the 18-day, just crossed the 100, and that's keeping the market up as well. Closing under all this, and especially taking out the low about 5 days ago, that would be the problem for the market. But right now, I think the market is looking at itself, and I think it's satisfied, able to hold on. This red line here was in place, but with an outside day up today. I just wanted to leave that on for you to see. If you take out today's low, then I think you can move back to the 18-day average. Don't take that out, and you still got a great chance of that upper Bollinger Band. When I look at momentum, I hate that it's overbought and turning down. So, is this an area where you deploy new money? From my perspective, become a subscriber and you find out. In the NASDAQ, the 100, you can see that the market's high is 22,699.50. We're making runs towards that. You can't argue that getting up onto the high today of, let's see, we got up to 21,858.75. So, you're getting within, 800 points of that high number. That's one way to look at it. But you also had an outside day up. And if you take out the low of an outside day, often it means you make a run to the closest moving average before you get through that day's high. In other words, it could be a bull trap. That's what you look to see. Is it going to develop? Here's another thing that I'd be very careful of. I'm getting momentum turning before price. And what the momentum in this chart is doing, let's go back a day. Both numbers were over 80. Both were over 80. Both were over 80. So I can go further back, but you've had this embedded reading. And now what the market is doing again, right now, is it's losing that reading. I believe momentum leads price. If that stays lost, the odds favor. The market's going to take out the lows of today, Thursday, and make a run towards that 18-day average of closes. In the Dow, you've lost the embedded reading and you're just sitting. The resistance points that stopped the market are the same ones that stopped it earlier. The 200-day average in gray, the 18. That's not to say the bias isn't up. It is. The market's over the 18-day average. The trend is up, but it's got no oomph to get itself going right here yet. In the Russell, it's the same thing, but the Russell's different than all of them right now. That's because while it had an outside day up, if you take out the low, you're literally right on the 18-day average. So it won't have a downside target. It would just be a question, did it break the uptrend? And here you've lost the upward momentum. A rough market that, again, you stuck your neck up for the first time today, again, back to the 100-day average. Each time you've been getting there, you have failed in this market. So I'll let you take it the rest of the way, but I know how I think about that. In the DAX, still strong. But, as I said, overbought as can be. No way that it's able to get over so far and run over that upper Bollinger Band. So while the trend's up, when you're overbought, do you really want to deploy money in an overbought or oversold market? In the bonds, something big is happening. The market is challenging and trying to get over for the first time. This is the 30-year bond, the 18-day average. If it were to catch on fire, and I'm not saying it will or won't, if it were to catch on fire, the combination of resistance is from this 114.23 level to 115.1. So that's something to watch. Momentum up. As of this moment in time, that's all it is. If you stay like that, you're on the friendly side of the market. That's not the case in the 5-year notes. You have a lower low, a higher high, and you're overbought as can be. I don't know what that is, but it's certainly not a trend. The dollar stepped on the shorts last night and came right back down, and they're going, darn it. But you've been oversold. What do I teach you in these tapes? Why do you sell if you want to go short in oversold condition? Number two, if you sold the 18-day average, and we talked about this, where do you put a stop? It's too difficult. The high back right here was 102.5. The 18-day average coming in was 107.5. What do I teach you? If you're going to sell the 18, it's already over that. You've lost the downtrend. It's exactly what happened, and it caught the traders. So you always want to take a look. You know, charting is like a puzzle. You put the pieces together, and you hope you can finish the puzzle the way that you want. It doesn't always work out, and you always have to know what's your exit. And here's the thing that you learn, I think, something that I've learned over my near 60 years in this game. Well, I'm thinking 1969 is when I became a registered broker, but before then, I was certainly looking at the markets. You know, I was head of my high school of a trading club, so you add that all together. I've been at this a while. You have to be able to leave your ego at home and say, I'm doing everything right, the trade didn't work, and forget about it when you have enough experience. When you're not experienced, I recommend you go back and just study and look at it. Don't change your technique because of it unless you found you did something wrong. Otherwise, just accept the fact that not everything works all the time. If it did, you would be the richest person in the world from trading. Doesn't work that way. It works to the way where you can do well, but you got to stay disciplined and figure out where you're at, when you want to trade, when you don't, are the setups there, things of that nature. In the euro, it's the flip-flop of the dollar. It got underneath all this and then came right back. So the traders that traded into that, they feel stupid today. They'll go, darn it, I was right, but here's what it did. In the British pound, we have a market here that is just overbought as can be, in an uptrend. I'll let other people want to play with that. Now we've got the June Bitcoin. As you know, we lost the embedded reading. When that happened, I said, I think prices will make a run back, and we did this in the May contract, towards the 18-day average. They track each other, and that's pretty much what is going on there. Then we get to the August Brent. And right now you got lower highs, lower lows. Now on Saturday, supposedly we're going to hear from OPEC on a decision as to what they're going to do for July production. I wrote about it in my newsletter today, rather large amount about it, and I won't share it here. That's why people subscribe with us. They want an edge. And I can tell you what was said in the markets and so on and so forth. These are important events. You had a huge outside day to the downside. I'm going to repeat. What you don't want to see is the market take this high out. If it does, then, and especially if it doesn't the next day or so, then you've got a trap. On the other hand, it threw out a new bear signal, but the market is oversold. Do I tell you to deploy money in an oversold market? I don't. You had the outside day in the July crude, but you're not in the WTI oversold. So I think this is where the traders are moving to. It's a better short sale if that's what you're going to do for the reasons, but you got to look at the dollar risk. The dollar risk from where you're at right now, it's 60.80, and you go to the highs that you made today was 63. I mean, you are dealing with a heck of a lot of money there. So there, again, when you see what I'm offering at the end here, our volumes 1 and 2 of technical indicators, money management is one of those tools. You have to figure out your money tolerance. What's realistic for the amount you trade? What's realistic per trade that you put on? And you're always sharpening your skills with it. I used to trade slow stochastics, and one time I got killed with them so bad that I had to adjust what I did. And you have to be realistic. As a purist in teaching it, I believe in it so much it's insane. But there's a dollar amount that you have to have where you call uncle. In the rebob, lower highs, lower lows, oversold. I can make an argument to get back to the $2 level, but it's oversold. I'll let you want to handle that. And in that gas, you got down to the lower Bollinger Band. So long, baby. And look at this. This market was a classic setup. It let traders sell into the 18-day average, and you missed taking out this high by a half a cent. Came down first for the 100-day and then the Bollinger Band, and you go, thank you so much. That'll pay for the kids to get some clothes. All right? That's the way I look at it. So again, take a good look here, and this is the volumes 1 and 2 of chart patterns, technical analysis, Fibonacci, Gann, trend lines. It's great to give you a primer and a refresher. How do you work with moving averages, the different oscillators? You know I love slow stochastics, but I'm very versed in MACD, very versed in relative strength, and I chose the one that I liked. But I tried them all for a long time until I came to that decision. If you're a cycle trader, which I tried for years, and I believe people really get it. And I do believe in cycles, but I found that I can do other things. I found that price counts for us really replaced what cycles do, and that's unique to the Linn Group, and I really like the product. IraEpstein.com, free offers. They'll be up on the top there. You know, you can always hit the icons. It'll take you right where you have to go. I'm Ira. I'll catch up with you in the other videos tonight or in the morning update. You have a great evening.